So I'm gonna teach you guys how I trade micros, how I scale in, scale out. These are replay. These are just demo accounts. And obviously, these are nitpick for a reason because I just want to show you how it's done. So market is trending down. Let's say market is trending down. I see support here. I'm waiting for a bounce so I can get a reversal, right? So let's play the tape. This is on the 1 minute chart. You can do 2 minutes if you like. The reason I've been doing 2 minutes, but for the sake of this tutorial, I'm doing 1 minute. See price action is coming, trying to bounce here. We see like previous support here. We're trying to see if price action can do that. We want to see confirmation of bounce, at least a strong candle up, break above the 21 EMA here. It shows that hey, buyers back up. This could be good support. Looking good so far. We got 3-bar candle reversal. Let's see. Okay, that lets a strong buying candle. As you can see, right, that candle is like a big engulfing candle. We see trend up. That's an engulfing candle, breaking this EMAs. So okay, when I look at this, I'm like, I want to risk long, but yeah, I always know that this is a downtrend. We could possibly come back up and then fail, and then we could, get stopped out and lose. So when you want to play safe, play micros. Okay, I think I can go long here. I'm playing one con. My stop loss, I'm looking at this low here. That's my stop loss. I'm risking $127.50. My TP should be at least 1 or 2 or near VWAP. So let's just take our measurement tool here. I always use this. It will help you out a lot. I suggest you guys start using it. So from here to VWAP, it's about 1.97, almost 1 or 2. You can do 1 or 2 exactly if you want to. So let's click here, 1 or 2 exactly, right? And then this is for your TP, right? So now you're risking $127.50 to make $247 off of one con. But obviously we're gonna add into this. This is potential profit, right? But we're gonna add to it. So the potential profit will boost up. But also remember, when you're adding more risk. So your potential downside is gonna be a little higher. So I'm gonna show you the remedy for all that. So now I added, let's play the tape. Let's see if we get our ways. Hindsight, we will. Okay, here we go. Price going up. So when do you add yet? No, I don't want to add yet. When do I want to add? Okay, here. I'll stop here. I might want to add here because couple things. My risk is $127. I'm at 100. I'm looking to add here at least one con, or you want to be super aggressive. Like, okay, I'm near my TP. If I add 3 here, I'll get most likely I might hit it. But if you add, you have to move your trail, you stop up, right? So let's say I want to add 3 here, for example. I'm gonna add 3 cons here. Boom, boom. Once you add, obviously your average goes up, and now your break even is a lot closer to this candle, right? So then I want to see a stop 3 con. So I add 3, I have a sell stop ready to move up, trail up also. And I'm also going to trail this up, my last candle also. Okay, so now look, I'm risking $591.50 to potentially make $680. But that's just off of 4 con total. I'm not really risking all that because my stop is higher, right? So I'm probably risking just half of that, maybe 200-300. So this is my sell stop. I will continue to trail up, but not so tight, because if I trail like from here, it's possibly gonna get me stop back. I just added. Why want to trail so tight? You get stop out, right? So just wait for this candle to move and then start to trail some more and more. So right now I want to trail around here. Actually, that's too tight. So this candle here is fine. This is my stop for now, and I'll play the tape. Okay, price moving up. Boom, I'm gonna stop there. So price moved up quite a bit, right, off of where we added. Now we're up $308.50. So you have all this question, thoughts, process in your head, like, do I want to start trimming profit now? Do I want to start trimming profit? How do I go about this? So yes, you could consider trimming profit, or you consider controlling your stop up to at least that last candle here, where if you really be conservative, like, hey, I just, I want to lock in some of this profit really bad. Okay, trail this candle. That way, if it comes down, you will be stop up in profit, and then you trail this stop up higher, even higher, maybe to this last stop that you had before. Trail the last, because once this gets stopped out, you have one more con left, and that con will be your runner and try to your TP, and you can keep trailing the stop up. Okay, so okay, let's say right now I'm being a little conservative. I don't want to get stopped out yet. If I come up here, I know I'm risking getting stopped out in profit. So I'll keep my stop at this candle right here. And we're going to play the tape. See what price action does for us. Okay. Keep trending up again. Come back down. We haven't not stopped yet, right? So still looking good. Still looking good. Still looking good. Still looking good. Okay, at this point, you're like, okay, I'm up $440 now. Hey, it's up to you. Do you feel like comfortable trimming now? You just risked earlier like $127 off one con. When you start adding, now you're up $440. Yeah, definitely take some profit. I mean, it's up to you. I would definitely trim like one con, two cons to be safe, and then keep trailing up, or keep it as it is and just trail up again. This is the last candle. I'm gonna trail to the last candle, candle by candle. This is the wick of that last candle. I'm gonna trail up, and once I trail that up, yeah, I'm gonna trail this stop up too. Okay, so let's play the tape. Looking good. Trail up again. Okay. Got stopped out. Okay, we stop in profit, and then boom, the rest hit a trigger or stop, hit or TP. Did you see what happened there? Right? Because I trailed too tight, but that's okay. I still lock in profit, and I just have one runner, and then I hit my TP for my last runner. That banked me $472 off of one con. You can't be mad at that, right? So there's nothing wrong with being too conservative. There's also nothing wrong with being a little risky and just holding your stop here and just waiting for it to really to your TP. You would have made probably an extra $200, right? Because the last few was like around 600 something. Do you see what I'm saying? And the 1 to 2 risk reward ratio is always good, always good. Start, and every time you add, you're trailing, you're trailing, You have a trail. Every time you add 3, you have a stop, sell stop for 3 to trail up along with it, because that's going to be your key. Because you added 3, that's very aggressive because you started 1, you add 3, that's aggressive, right? So if you get stop out, you want to stop at your 3, you want to be wrong at 3 and keep your 1 left. That way you're still safe. Your risk is still, you minimize your risk again. So that's how I do it. Hope that helps explain to you guys how I trade micros and how I scale in and how I scale out. This is what I mean. When you size down, your emotion gets keep in check, and you're not worried about blowing your account if you're wrong your first entry, right? Because that's most of the time traders blow their account because they size up big, or at least 4 or 5 cons, even with micros, and you're risking at least more than 1%, not 10% of your account. So if I started with 3, at least 5 here, my risk here, I'm probably stop at like $500. Like if I'm wrong, like that hurts. That's gonna hurt your account. You'd rather be wrong at like $127. You're not gonna blow your account if you're wrong there, right? If you start with 1 and you didn't get your way, it just reversed. You get stop out. You stop up for $127. You get what I'm saying? Instead of like 500, and that because 500 will get you in tilt. Now you start to revenge trade. You're like, oh man, I want to make that back. This and that. Is it easier? Let's just put it. Is it easier for you to come back off of a 127 deficit, or is it harder for you to come back from a $500 deficit trade? Of course, it's harder for you to come back from a bigger deficit, right? So trading micros starting entry with one con will give you more opportunity to be wrong and still be profitable at the end of the day, right? You could be wrong 2-3 trades, you still probably negative 300, and you still come back from that off of one trade. Because one trade, if you're right, you scale up, you can make 300-400, and you back even. But if you're in trading freaking 5 cons, right? You wrong 2 times, you're probably down $1,000, and that's a lot. That could potentially blow your account up already. You can't handle that kind of con. You can't handle being wrong like twice a day. You know what I'm saying? So I hope that helps you guys look at trading differently and learn to appreciate micros. Once you get better at this, and let's say your account grows to like 10,000 or 50,000, then yeah, you can start trading minis again. Because what's risking 1,000 off of 500,000 or $50,000 account? Like, you're good. You know what I'm saying? So trade small until your balance is high enough where you can trade minis. That's all for today, guys. I hope you liked the video. Comment below, subscribe, like. I appreciate all the follows, all my sub. Thank you. Bye.